with what he called the other great perspective. From a demand point of view, we are seeing a gradual improvement, and that has continued during the quarter. Input costs continue to inflate in select categories and are primarily crude-led. Now let me talk about growth. In this context, we have delivered a strong volume-led growth. Our reported revenue growth was 3%. However, after removing the accounting impact of GST, our comparable domestic consumer growth was 16%, with 11% underlying volume growth. Our comparable EBITDA margins expanded by 160 basis points, and our net profit at 1351 crores was up 14%. Let me talk a little bit about our categories here. Home care delivered a double-digit volume growth. In laundry, all our key brands grew in double digits, and household care growth was led by Vim. Laundry also saw the launch of Comfort Pure, a fabric conditioner for delicate baby skin. In personal care, the growth was broad-based and across both personal wash and personal care. Growth in skin care was led by FAL and Pond's. In hair, the growth was broad-based and volume-led. This quarter also saw the launch of Pure Derm, our new anti-dandruff range of shampoos. Color cosmetics sustained its robust performance, continuing a strong performance trend. In deodorants, we launched Axe Ticket, a new pocket-sized perfume pack, and extended Rexona antiperspirants nationally. In personal wash, the premium range continues to perform remarkably well. Growth in popular segment was relatively muted. Moving on, foods witnessed good growth led by ketchups and soups. Refreshments sustained robust delivery yet another quarter, with double-digit growth in tea and strong volume-led growth in coffee. Ice creams and frozen desserts also saw double-digit growth on the back of geographic expansion and some exciting innovations heading into the season. From a drivers of growth perspective, I think it continues to be our relentless focus on innovation, impactful 360 degrees activation, and a sharper in-market execution. Sustained market development in emerging categories like fabric conditions, green tea, natural care continue. And we continue to invest behind our brands, both from an innovations point of view as well as exciting activations. So when I look at it from a profit and loss point of view, our EBITDA grew by 24% and our comparable margins by 160 basis points. Cost of goods sold was down on a strong savings program. Net profit after tax before exceptional items stood at 1,409 crores, and which was up by 26%. Net profit, given some exceptional items in the quarter, was up 14% at 1,351 crores. We'll also talk a little bit about our full year performance. For the financial year 17-18, our comparable growth after adjusting for accounting impact of GST was 12%, with an underlying volume growth of 6%. Our reported revenue, for the said reasons, would be lower at 2%. Our comparable EBITDA margins for the full year expanded by 155 basis points, and our profit after tax before exceptional items stood at 5,135 crores, which is up 21% year on year. Net profit at 5,237 crores was up 17%. From a dividend point of view, we continue to reward our shareholders, and the Board of Directors have proposed a final dividend of 12 per share for the year ended 31st March 2018, up from last year's rupees 10 per share. Looking ahead, we expect gradual improvement in demand to continue. Input costs are likely to inflate further, given crude, and currency is the other key watch out for us. With trade normalizing and demand improving in the near term, we anticipate a step up in competitive intensity. Our strategy remains unchanged. Our focus remains on volume-driven growth and improvement in operating margins. We will continue to drive growth which is competitive, consistent, profitable, and responsible. Thank you.
One at a time. No, I think I saw that hand go first. So one and then two.
First of all, I want to talk about the volume growth. 11% is the kind of volume growth that you've come up with. The street was expecting anywhere between 6 to 8%. Firstly, I wanted to understand what has really driven volumes specifically for this quarter, because we do understand the last quarter there was a low base effect. And secondly, in terms of rural growth, growth, what are your expectations on rural growth? Is it back to historical growth levels? Because 2 times of urban growth is what we've seen in the last few quarters.
Yeah, first, if I just pick up the rural growth, I think the good bit is that the rural growth has again come back. There was a period of time when the rural markets were growing less than urban. So I'm very happy to tell you now there are pockets where they are growing ahead of urban. Not at the historical rate of growth, 1.5, 1.6x, but clearly there are green shoots that rural is up again. And the other important bit is we should also thank the government. The steps they took to reduce the GST rates and the way we as Hindustan Unilever reacted by passing on the benefits to the consumer, that also I believe has played an important role in fueling the volume growth. But when you look at our performance over the last full year, delivering 12% top line growth, 6% volume growth, and a decent increase in EBITDA margin, I think this stems from what we've been doing over the last few years, focusing on the core, driving penetration and the distribution, ensuring that we have multi-year engagement platforms on the brands to build the brand equities, focusing on execution excellence on the ground to improve the quality of distribution and the assortment. Yeah, all these things put together, and of course, yeah, the lifeline of a FMCG company is innovations. We've had some very successful innovations and a thrust on market development, which is developing the categories of the future. All of this has played a role. And then, of course, has been our focus on removing non-value adding costs from the system. That has given us the fuel to grow, which we have invested back behind the brands. So all this put together has resulted in what we would like to believe is a very satisfying performance.
Sir, by when do we expect rural growth to go back to 1.5%, 1.5 times of that of urban, and also which are the pockets that have witnessed, that we've seen that is outpaced urban growth?
See, we would not like at this stage to call that a trend has been established. Yeah, like all of us in the country, we would like rural India to prosper. Yeah, over the last few years, there was very clear stress in rural India. We know about that. The wage rates were low and the MSP increases were low. You have seen that the government has reacted, and in a very positive way. They are determined to put more money in the rural areas. That, together with us lowering the price consequent to GST, should help the cause. The other big leg, of course, is the monsoon. From all indications, the monsoon should be normal. So all this should augur well for rural areas, but I would say just wait for a couple of more quarters to see whether a trend is really coming through.
So as far as input prices are concerned, we're seeing the crude prices gradually increasing. What is the kind of impact that we can see in them?
You know, we have always explained there is no one-to-one correspondence between input price and our selling price. First and foremost, our focus is on consumers to ensure that we maintain the price-value equation. We look at all lines of P&L, we look at all the levers in the P&L to play the game. Our relentless focus on generating savings, reducing the cost base, we try to ensure that we minimize the impact to the consumers.
To understand that you have taken about 2.5% hike in the
Yes, you know, now if the prices go up, you can imagine that the fuel prices, they were very low last year. There has been a significant increase now. Rupee has also depreciated. So there would be an impact on the cost base, but our endeavor would always be to maintain the price-value equation.
I think to contextualize it, I think just to add to what Sanjeev said, if you look at crude itself in the last one quarter has moved up by 20%. Currency has moved up by 6 to 7. And I think you'll have to look at the contextualize it with what price increases in a particular category Sanjeev has spoken about, and then starts to put into play how savings are enabling us to manage the full portfolio.
Yeah, and the important thing here is portfolio. Because it's not that we do, as Sanjeev says, one-on-one price increases on every part of our portfolio. We also see Where is it that we can afford to take some pricing in terms of maintaining a degree of competitiveness? Where is it we believe that our consumers will benefit or our market development efforts will benefit out of maintaining prices? So it's a combination of all these factors.
So, sir, in the previous quarter, which areas were the growth drivers for you? Because
You know, you would have seen from what Srini talked about, the wonderful bit has been across all profit centers, whether it is personal care, home care, foods and refreshment, we have had double-digit growth. And again, we have been it has been widespread. Yeah, but what gives us competitive advantage, if you have been tracking Hindustan Unilever, first is our winning in many India strategy. And second is, we have brought in huge agility in the business through what we call as the CCBT structure, country category business team. So this has unleashed not only huge energy, but has made us much more agile. So this too, I would certainly believe, have played a role in HUL's performance during the last.
So you cannot have a performance that is like this unless it's fairly broad-based. There will be differences, but at the end of the day, it is broad-based. Sorry, there was one other question here.
So just a continuation
Yeah.
on the first one I asked.
Yeah.
You mentioned 2.5 is what we've seen in detergent so far, but looking at the trend with how crude is increasing day by day, that any further price hikes going forward, because 2.5 is what I understand is for the month of April.
No, we don't signal price rises and price increases, okay, and because that's not the way we do our business.
Any outlook?
No, there is no outlook. There is only one outlook, that yes, there is an escalation in commodity costs. We signaled it last time, and we know that's going to continue. But we've been there before. All I think you should be taking away from this is that we are well prepared to ensure that we continue to give the best competitive value to our consumers. Yeah.
So as of last quarter, there was 119 crores that the company had collected and was looking for a chance to pass on to the government. Can you give us an update as to where we stand with that and how we're looking to take that forward?
Mm-hmm.
Yeah. You know, we have suo moto, as you know, that we believed it was the right thing to do because there was a time lag between the price, the GST reduction, and by the time we could implement it, because the time given to us was very short. And we thought it was the right thing to do to go and offer it to the government, which we have done. The government has still not accepted the amount. They are still doing the necessary scrutiny, but we believe at some stage they will come and accept the amount from us.
So have you made a further payment to the government?
Even that amount has not yet been accepted. We have offered the money to the government.
How much?
I think just to let me clarify that. I think when we met last time, we had called out 119 crores as an amount. As of March, from an HUL perspective, that amount is about 124 crores, which also then starts to tell you, because as the new networks have landed, obviously the benefit is now directly getting passed to the consumers through reduced prices or increased grammages. Having said that, we have also done something from a good governance perspective, and you will see that in our results. At the point of transition, around November 15th, many of our redistribution stockists, we have 3,500 of them. They were also sitting on stocks on which they would have got the benefit. There were two ways it could have happened. We could have asked all of them to go and offer it to government. As a matter of good governance, what we have done is, we have recovered 36 crores from them and also offered it to the government. So therefore, when you will look at it, you will see as 160 crores number in our notes to accounts. I want to make it very, very clear and explicit. It's only 124 crores from an HUL perspective. The 36 crores is again a proactive measure to another good governance. So that's got no implications. We are recovering it and offered it to the
So
government.
which we have done it on behalf of our distributors.
Yes.
Also, they are talking about the premiumization as focus on the Ayush segment. We understand that it does. So if you could run us through how the growth panned out.
See, premiumization is a secular trend. Our thrust has been on premiumization. You would have seen the work that we have done on innovations. Yeah, there are very good innovations which have come out in the marketplace, which is at a price point 120 and above to the market. As far as naturals is concerned, again, we have been pleased with our performance. We have a three-pronged strategy. One is there's a master brand Ayush. Then there are specialist brands like Indulekha, etc. And then there are variants, natural variants in our existing brand. I think all put together, I would say that our strategy is indeed working. We've had good growth rates coming out of our natural strategy.
The natural variant continues to sell, like Patanjali and all are gaining market share. So what's your strategy there?
See, first is in a big portfolio, yeah, we have to accept that there will be parts of the portfolio where at times you will have to do more work, and we accept that. In oral care, we have got more work to be done. We are pleased that we have got growth back in oral care, but there's still more work to be done. We are very pleased with Ayush. The consumer response to Ayush, Liver Ayush, has been very satisfactory.
A lot of it has been driven perhaps by the cost efficiency that you all have been bringing about. Forward, how much more can we expect in terms of cost efficiency, cost savings that we could improve?
I think we have talked about it. We do not give any guidance, and I think we'll repeat that. Today, cost and taking costs, which are not anything which is not benefiting the consumer, is absolutely in our DNA, in the ethos. There is a comprehensive program we run across all elements. Mix is important, efficiencies are important. Suffices to say that we will continue to do that. And obviously, what we have also said is that modest margin improvement is what we will look at as a business, and I think that strategy remains unchanged. And I don't think we really would like to comment on where it is, but clearly, savings is absolutely integral to how we really run our business.
See, don't forget that we've done margin improvement for the last 7 years. Year on year, 7 years. Okay? Therefore, it's integral to the way we run our business. We are not saying we're going to increase it by so much, but we are saying integral to our business is that we want to drive our growth through innovation and market development. But at the same time, we want to continuously drive improvement in operating efficiencies so that these are two parallel tracks on which this engine runs. You know what I'm saying? Because you don't do 7 consecutive years of margin improvement if you have a one-off way of doing it. Either commodity costs go up, something comes down. So it's a continuous, relentless focus on just making sure that we are remaining lean and agile.
Just to pick up from what Harit said, during the 7-year cycle, there have been many periods where the commodity prices have gone down, and there have been periods where the commodity prices have come down. So we have been able to manage the turbulence of commodities going up and down and still deliver 7 consecutive years of margin improvement.
Anything else?
So do we see more launches from now in the national space?
Watch the space.
No, just give us an indication.
You know, for us, naturals is important. That's a growing trend. And we are serious about improving our game in the natural segment. And like I said, we have a 3-pronged strategy, and we'll continue on that way.
You see, again, the thing to note is, because, it's, and we've said this every time, it's not about the number of launches we do. We want to make sure that if we do launch something, we also nurture it, invest behind it, and build it. So there is a particular cadence of innovations that we manage. We've had so many launches, okay? And now when you say naturals, I mean, Indulekha, I mean, what a success that is. And you can quote us, okay? It's a huge success. Now, do we now say, okay, let's move on to something else? No. We want to make Indulekha an even bigger success nationally. Similarly, we've launched Ayush. We've just about gone national. We want to make sure that we nurture the launch. There will be things that we have to correct as we move along. We will do that. But we will stay the course. And that's really our principle generally on innovations.
But can we very safely say that premiumization is where your focus is on going on?
It's not about either or. Like I said, first and foremost, our focus has to be on the core. That's a large part of my business. Second is we have to nurture the future core. And within nurturing the future core, there is a premiumization leg, and then there is a naturals leg. So it's doing all this together. That's what makes a difference.
So from here on, now that you're saying, and also at the consumer demand, and you see double digit because we've seen 2 consecutive.
See, I have been
quarters of-
absolutely clear. If you recall, even in the last call, I had said wait for a few quarters till you believe that the trend has been established. You must accept that the base has been volatile. Yeah. The year has been good for Hindustan Unilever. The quarter has been good for Hindustan Unilever. But I would still not say a trend has been established. Wait for a couple of quarters, see how it happens, and then we can say that yes, the markets have truly bounced back.
But there is, as we have said, and as Srini said in his introduction, there is light at the end of the tunnel. We are seeing a gradual improvement in demand.
That's right.
We remain hopeful. But remember, we are now heading the next monsoon season.
Yes.
So, you know, at the end of the day, there are so many variables. But if you want to know, our near-term outlook is that there is a gradual improvement in demand.
Absolutely.
Yeah.
Absolutely. Yeah. Perfect.
Thank you.
Thanks.
Thank you very much.
That was the management of Hindustan Unilever suggesting that there is a gradual uptick in demand. However, we must wait for a few more quarters before we can actually establish the trend that growth is genuinely back. Hindustan Unilever has posted a steady quarter, and a lot of these numbers are ahead of street expectations. If you consider your revenues, which will stand at over 9,000 crores, that's ahead of the street expectations. A substantial expansion in your EBITDA margins, and a lot of this has to do with your volumes number. That stands at around 11% right now. Consequently, we've seen profits grow by as much as 14% on a year-on-year basis. To discuss this quarter gone by, we have in conversation with Harit Kapoor, research analyst at IDFC Securities, who is on the phone line with us. Harit, hi, good afternoon. Tell us, how are you reading the numbers with respect to your expectations, above, in line?
Yeah, hi, good afternoon. Operationally, we believe the numbers are ahead of expectations. We were factoring in 9 to 10% kind of a revenue growth at about 8940 crore revenue, and they've actually delivered over 9,000 crores. Two interesting things to talk about. I think one is the volume growth, which we were looking at 8%, and it's come in at 11%. Remember, this is off a base of positive volume growth of 4%. So given that the base has improved 3Q over 4Q, the company has still delivered a positive volume growth at 11%, which is in line with what they did in the third quarter of FY18. So that's one positive. The second is on the EBITDA margins. EBITDA margins, we were looking at about 21.5%. They delivered 22.5%, including operating income. And if you adjust for the one-off exceptional item, the PAT growth of 26% is also ahead of our expectations. So overall, it's a very strong set of numbers, which is ahead of us as well as street expectations.
Harit, I'm not sure if you've heard the management right now, but they did speak about growing and building on their brands. If you have picked up anything on the commentary, if you could tell us what stands out for you, and otherwise, if you could tell us about the brands that you think should drive growth, at least in the next couple of quarters.
Yeah, so I think with my brief listening in on the management commentary, a couple of key positives. I think a positive, commentary on rural growth. Remember, HUL has over 40% of their sales which come in from rural markets. So a positive commentary on rural uptick is key. I think the second thing about overall gradual uptick in demand is positive. If you look at the last time the company delivered 2 consecutive quarters of double-digit volume growth was about 7 years back. So given that, clearly it looks like things are on the uptick. As far as the categories that would have driven this growth, HUL segments the business into 4 categories. And my sense is that the home care category, which just showed a 3% reported growth for this quarter, my sense is the actual, comparable growth would be closer to 20%. And that would have been the key category driver. But my sense is that all the other categories, personal care, foods and refreshment, have also grown in double digits as far as the comparable numbers concerned, adjusting for GST.
And just a couple more questions, Harit. You did speak briefly about the different categories. What is it that you will now be watching out for when it comes to home care and personal care, considering a majority of the revenues come from these 2 segments? What would you like to see from both these areas? What can we expect from margins going forward?
Yes. So from the home care category has been a standout performer over the last several quarters, and the company has continued to gain market share in that space. So it will be important to see how the trend on growth there is. I would expect that there would be a slightly slower growth in the home care category comparatively, because these kind of 18-20% type growths are probably not sustainable in a category with a high penetration already. However, company has demonstrated very strong market share improvement, which is visible given that the market would not be growing at this pace. I think the bigger category driver going forward could be personal care, because these are categories which have a lower penetration and higher margin. So would watch out that the personal care category should grow at a faster pace on a sustainable basis. My sense is that over the last year there have been a lot of benefits on GST, which has led the small HUL gaining share from the smaller players in categories like detergents and soaps, which has been driving this growth. So I would expect more of this to continue, but categories like personal care to be key drivers going forward.
Right, Harit, finally, I know that you need to take a deeper look at these numbers, but what's your house call right now as it stands, and do you think it's likely to change when it comes to HUL?
Unlikely to change. We have a positive view and an outperformer rating on HUL. We will obviously, as you said, take a closer look at the numbers and get back, but it is unlikely that we will be changing our house view. We are currently at an outperformer.
Okay, we leave it at that. Thanks for joining us and giving us your view on HUL and its earnings. We've had a strong quarter coming in, and it's a very large beat but when it comes to its volume specifically. That's also the reason why its revenues have come at nearly 9,100 crores as against expectations of 8,900 crores. That's 200 crores above the Bloomberg consensus expectations. A considerable expansion in margins at around 23.4%, and of course profit also moving up 14.2%. This is despite the exceptional loss of around 64 crores. So, it's a good quarter. We'll have to wait and watch as to how the stock opens tomorrow. But with that, it's a wrap on the special edition of the earnings with Bloomberg Quint. Lots more lined up, so stay tuned to Bloomberg Quint.